Buy now, pay later has become one of the most seductive financial tools of the modern era. It whispers promises of instant gratification without the sting of immediate cost. The marketing is smooth, the checkout process is seamless, and in just a few taps, you walk away with the product you want while your bank account remains untouched, at least for now. This has made buy now, pay later not just a convenience but a cultural phenomenon, a bridge between desire and delayed responsibility. It feels like the ultimate financial hack, a loophole in the traditional system of credit cards and loans. But just beneath the surface, hidden in the fine print and buried in your credit report, lies a reality that is far less glamorous. The genius of buy now, pay later is not just that it lets you delay payments, it's that it disguises itself as something harmless. Unlike traditional credit, which feels heavy and serious, buy now, pay later markets itself as casual and consequence-free. Most people don't think of it as debt at all. After all, it's just a small payment spread over a few weeks, interest-free if you play by the rules. But financial systems thrive on perception, and when something doesn't feel like debt, consumers tend to overuse it. This is where the fine print begins to matter. Each buy now, pay later transaction is still a form of credit, and depending on the provider, it may be reported to credit bureaus. What feels invisible in the short term has the potential to stain your long-term financial reputation. The modern credit score was designed to reflect risk, to quantify your ability to manage borrowed money. When you miss a buy now, pay later installment, even by accident, it's not seen as a minor slip. It's treated with the same severity as a missed loan repayment. The irony is that most people don't even realize this until the damage is already done. Your credit report doesn't care whether you missed a $30 installment or a $300 car payment, it only records that you failed to meet your obligation. And in a financial system where your credit score can determine whether you get a mortgage, a car loan, or even a job, those tiny missed payments can ripple outwards in life-altering ways. But the story goes deeper. Buy now, pay later has redefined how debt is disguised in plain sight. Traditional credit cards are regulated, monitored, and tightly linked to credit reports. Buy now, pay later, on the other hand, lives in a gray area where regulation hasn't fully caught up. Some providers report to credit bureaus, others don't. Some treat each installment plan as a separate loan, meaning your credit file may suddenly show multiple open accounts for purchases you barely remember. This makes you appear overextended, a red flag to lenders even if you've never missed a payment. The fine print rarely spells this out. Instead, it buries the reality beneath marketing slogans about freedom, flexibility, and control. The psychology behind it is just as powerful. When you swipe a credit card, there's at least some awareness that you're borrowing. Buy now, pay later bypasses that. It breaks down the barrier between wanting and having, normalizing the idea that almost nothing needs to be paid for upfront. For companies, it's a goldmine. Customers buy more when the pain of paying is spread out. For consumers, it feels empowering, until the stacking effect sets in. A few $20 payments here, a couple $50 installments there, and suddenly you're juggling obligations across multiple platforms. You don't see it as debt until it's too late, but the credit bureaus do. They see the pattern long before you do, and they record it without sympathy. So the question becomes, is buy now, pay later a tool of financial empowerment or just another trap dressed in modern branding? The truth lies in the fine print. In those terms and conditions most people scroll past. Yes, buy now, pay later can work in your favor if used with surgical precision, timely payments, controlled purchases, and full awareness of reporting practices. But for the majority, the convenience is a double-edged sword. It seduces people into overextension, quietly recording every misstep in the language of credit reports and risk assessments. It creates a hidden cost that won't appear at checkout but will resurface when you least expect it, when you're applying for a loan, negotiating rent, or trying to secure financial stability. Buy now, pay later is not inherently evil. It's simply brilliant. Brilliant in the way it reshapes consumer behavior. Brilliant in the way it embeds itself into everyday spending. Brilliant in the way it makes debt feel invisible. But brilliance in finance is rarely designed for the consumer's long-term benefit. It's designed to increase sales, to drive engagement, and to extract value from people who don't fully understand the system they're entering. The fine print is not there to protect you, it's there to protect them. And your credit report, silent and impartial, records every decision you make. In the end, buy now, pay later is a mirror. It reflects how easily we trade future consequences for present desires. It reveals how quickly we embrace convenience when the costs are delayed. And it shows that, in the modern financial system, nothing is truly free. The fine print you missed isn't just words on a page, it's the quiet architect of your financial future. Whether buy now pay later becomes a stepping stone to better money management or a pitfall that undermines your credit depends not on the system itself, but on how carefully you read the lines between what you're told and what you're really signing up for.